Hey, welcome back to the channel. And today was a rough day in the market. And, we had the Fed come out and cut the rates by 1/4 of a point, which might as well have been a raising of the rates because 1/4 of a point is not going to do much. But nonetheless, he's trying to show the world that he's serious about cutting down our rates that are high. But plus, the Fed has raised the rates on themselves because now, the money that the Fed prints, the bonds that we print, they have to pay a higher interest rate. So he's trying to get that down. Anyway, we need to get rid of the Fed, but that's besides the point. He did a really great job in screwing up the market. And, it wasn't like we didn't see it coming. In fact, if you've been watching my videos, I have a market timing system and I talk about the market going red. And when the market goes red, you've got to be more conservative. And today was a day that, you've got to be conservative. This was the 10th day in a row that we're down. And we've been red for, since last week. And so I've been telling everybody, hey, listen, you've got to be in the money. Now, a lot of you people, it's cool because we've been trained that you buy a stock and you sell a call out of the money. But what happens when the stock drops? What happens when we have a day like this where we're down 10% on Tesla and 10% on MicroStrategy and, we're down $5 on Apple and, just the whole screen is red. What do? Well, you can wait. That's what most people are, trained to do. But a lot of times you have to wait a year or two. And I recommend that you sell deep in the money during red markets. Now, hey, listen, I'm human too. I wasn't as deep as I would have liked. I didn't anticipate an 1,100 point drop. Take a look at the screen. The Dow Jones Industrial Average was down 1123, 2.5%. The S&P 500 down 178, down 2.9%. The Nasdaq down 3.5%, and that's all the stock, the good ones and the bad ones. And so there was a lot of rough stuff today. Tesla was down $40-50 at one point. MicroStrategy was down $40-50 at one point. Nvidia was down $5. Apple was down. Everything just got hammered. What are you doing? All right, what's your defensive strategy? Because if you are not collecting income, then all you're doing is you're waiting for the stock market to go up. Now, I've been doing this series on MicroStrategy and some on Tesla as well. Those are my two big positions. And a lot of people are like, yeah, Mark, but Tesla's going to go to 1,000 and MicroStrategy is going to go to 500 at least next week, and it's going to go to 1,000, and you shouldn't be in the money because you'll lose money in the money. So I've had all these people that just don't understand the way this program works. The in the money protects you when things go down, right? So Tesla was at 483 2 days ago, and I had the 450s. I had $33 of protection. That means the stock could go down $33, and I was unscathed. Now, when it went down below 450 today, it started to hurt because I would lose dollar for dollar below the strike. But those of you that are not looking at all of the breadth of the choices of selling covered calls are missing out on the fact that when you go in the money, you protect your account on the downside. The deeper in the money you go, the less juice you make, but the more protection you have on the downside, right? And I have so many people, and it takes a long time to take your brain out of the old way where you buy the stock and you sell the call out of the money and everything's great. That is great when the market's moving up. But when you have days like this, you've got no protection. You've got no net. The only thing you can do is buy your calls back for pennies on the dollar and hope that the thing bounces tomorrow, which it might. Like we've had 10 days in a row of selling. There was a lot of selling today. Computers got involved, humans got involved, market makers got involved, everybody got involved. There was selling. What are you doing to protect your account? Did you lose $100,000 today? Did you lose $50,000 today? And now your strategy is to go like this and look at the screen for the next 2 months and wait for it to come back? Or are you going to sell calls against that so that you can get some of your money back? That's the whole point here. Like, we know that the markets are going to go down. I'm not saying we make money all the time. I'm saying we make juice all the time. I pocketed some juice today on a lot of positions. We make juice all the time, right? We sell here and we buy back here. And when we do that, we pocket that. But if you're not in the money, you're not protecting your account. And so I was able a couple weeks ago when MicroStrategy went up and hit like 548. Remember that? I had the 400 in the money calls and the stock came down 120 points in one day. And I didn't lose any money. It went all the way down because I was in the money for 400 when the stock was at 538, 548, whatever I just said, whatever it was. I had that $150 cushion or whatever that cushion was all the way down to 400. So I don't have all the answers. Listen, I'm not perfect. My job is to help people that want to learn how to create income, and that income is part of the downside protection. And you can do it like everybody else does it. You buy the stock, you sell the call out of the money, and you get 20 bucks or whatever on like a micro strategy. Cool. But the stock goes down 50 and it goes below your strike. If you're in the money, you get protected on that. So, I could beat the dead horse here, but the bottom line is we had a really rough day. There's some hurting people out there. I hope you're not one of them. And if you are, don't worry. There's a sunny day coming. Don't panic and freak out. Have a plan. That's what I tell everybody. Is like, what's your plan? Like, do you have one? If you don't have one, you need one. You need to have a plan that includes days like this. All right. So let me just summarize by saying, try to make money when the sun is shining. But when the sun isn't shining, make sure you're protected, because these red markets can be brutal, as you saw today. See you on the next video. Bye. Hey, it's Mark Yegan. If you haven't subscribed to this channel, please do me a favor and hit the subscribe button right now. It helps get the same kind of material out to other people and helps me grow the channel a little bit. Also, if you would like the video, if you think it's cool, great. If you don't like it, give me a thumbs down, but tell me why you're giving me a thumbs down so I can get better. And then hit the notification bell, and that way you get the videos as soon as they come out, because I give you timely information a lot of the time, and you want to know what happens before that information gets stale. Thanks for being here.